Good morning, everyone. Welcome back to our weekly stock market update video. This is we're doing analysis on the overall market and as well as the Mag 7s. With the market hitting all-time highs this month, as well as we've been 7 months out straight, are we looking for a pullback in November and December for more monthly consolidations? And with a little bit signs of showing a little bit of weakness after the Mag 7s reported their earnings. We'll be looking at red flags as well as sentiment data's dark pools, and we'll see if anything is on the horizon. All right, let's get started with AI and sentiment datas. So with this flipping back and forth, so far is pretty good indicator showing if we're gonna get a slight pullback or not. Right. Just on October 8th, right? Everybody flipped to a bull, and there was no bears left, and we got this flush, right? And this October 10th flush, just right when everybody flipped to a bull that week. And after that, right, we consolidated sideways, broke out. Everybody was bearish right when we were going sideways around here. See everybody become the bear again, literally the following week after that October 10th drop. And then the market just squeezed everybody out again, right, for the next 2 weeks as we have tons of bears, 46, 42%. And then this week, everybody flipped to a bull again after 5 days up, right? Literally, it was like 1, 2, 3, 4, 5. If you don't count this day, right? Everybody was pretty much up for the past 2 weeks. And everybody flipped to a bull over here on the 29th. And then next thing you know, right, we're going sideways again here a little bit, right? Obviously, only pulled back 1.5%. It's not that big of a deal. But so far, it's showing right? It's flipping back and forth, and it's pretty good. Versus the fear and greed index is pretty broken, right? We've just been sitting at fear, regardless of how high we go or how low, regardless of what kind of consolidation we get. We're just it's sitting just at fear, literally. Um, really not going anywhere that much. So yeah, I wouldn't really use fear and greed index at the moment. All right, so for earnings, no huge market movers like last week anymore. We got it pretty much all out of the way. But there is still a lot of popular names like Palantir, Uber, Shopify, AMD is going to show us more into the semiconductor sector, SMC as well. Yeah, so if you're any one of these, and these are quantum names, QBTS, and you just take a screenshot. All right, so dark pool. So we got ARC coming in here. This is a 2x so of ARC. Okay, and so for me, if the names that are not as good in their earnings haven't rolled over. Usually the broader market doesn't roll over. So it would be these like innovation names where, um, they're not really making that much profit, but they're like promising a lot of innovation, that kind of stuff. Usually will roll over first if we're going to go into a recession. At the moment, we don't have any signs of that yet. You can see it slowed down a bit here, right? This dark pools came in at number one print, and number two just means it's the largest print um, ever printed in this ETF, particularly. Um, so we are still getting that congestion in one or two here. So if it starts rolling over below here, then we'll know that it's a sell. Versus right now, it's probably currently still a take profit, but we'll have to see. Now, this is also the weekly time frame, so it looks a little bit um, less zoomed in. But yeah, so we'll have to see if it actually rolls over first. Otherwise, market, if the weakest names, right, with no earnings are still ripping, right, why would the strongest names um, go down, right, when these big names are reporting great earnings, all that kind of stuff, right? So, all right, let's go into the technical analysis of the charts. All right, start with SPY. No red flags for me at the moment. So the only red flag for me would be if we start breaking back below any kind of structure, right? Very clear supply and demand. For bulls at the moment, full control, right? Builds a structure, breaks out, builds a structure, breaks out. For any kind of bearish actions that you want to short the market, you have to wait for a breakdown back into the previous supply structure. Bounce, have that structure act as resistance, and then you can look for a short potentially for that lower high, lower low. Currently, no signs of that yet. We were literally just consolidating just slightly underneath all-time highs, so no huge red flags. Probably been saying this for the past 7 months, um, but yeah, but just keep things simple, right? As long as you follow the trend, you have not been stopped out a single time on this entire way up, right? Weekly pivot, set here, set your stop loss here, another one here, set your higher lows and higher highs, another higher low and higher high, another higher low and higher high, another higher low and higher high, another higher low and higher high. So you would have just raised your stop losses and never been stopped out. If you raise your stop loss on the daily time frame, you had to raise it here, 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 and then you would have been stopped out on October 10th, which is still a pretty darn good gain, if you ask me, right? This whole move, you pretty much caught almost the whole move. So no red flags at the moment. Yeah, just continue to follow the trend. I know we've been talking about this the entire way up, where it's psychologically hard to go long after feeling like it's already so extended. But as long as you have a pivot and a level to play off your stop losses, you just continue to go long until bears shows up. Currently, bears have not really showed up yet. I mean, they have right done these like few day drops and that's it, a few day drops and that's it, right? But they never follow through on a downtrend. They could have done it here. When if they broke the lower low, that Friday's low, that would have been a daily downtrend, but they never did. So the trend is still intact every single time frame, monthly, weekly, daily. Everything is still in an uptrend. Similar idea with QQ, right? Broke out of this congestion, and then now we're sitting near all-time highs. No signs of red flag, which is pretty similar to here, right? This was a pretty big drop too. Went sideways. You can see bears tried, almost did it. And it's September 2nd. They almost made a new low and broke that pivot for a lower low. They didn't. So bulls played defense and we broke out. So another tightening range, bull break, and similar idea, congestion, bull break. That being said, I mean, we are obviously extended, right? If you zoom out to the monthly chart, we're even 7 month up, which, I mean, we'll consolidate sometime soon, but bears really need to at least show up in a daily time frame, right? Before we even have a monthly consolidation, if they don't even show up on a daily time frame, we're not even going to get a monthly consolidation. So if we start forming a daily downtrend, then we can zoom out to the weekly charts and look for weekly consolidations. And if we do form a weekly downtrend, there's very likely we're getting monthly consolidation. Yeah, but we are entering a stronger seasonality now. Our weakest seasonality was September, October, and we didn't even pull back in September, October. But who knows? Maybe market might pull like some kind of shenanigans, right? The weaker month, we end up going up. The stronger month, we ended up consolidating. Yeah, that could happen. But just stick with the price actions. If it continues to grind up, then we'll just continue to follow the trend. All right, Meta. So every week we talk about Meta being the weakest and Team Bear because it already confirmed a downtrend. Right, it's a daily downtrend confirmed and a weekly downtrend confirmed. So this is a daily downtrend. And we zoom out, this is a weekly downtrend, right? Lower high, high is lower than this one, and a lower low. Another lower high here, and a lower low. So continuation of the weekly downtrend. So that's why Meta is a lot weaker than its peers. That being said, got that earnings reaction and then sold off a little bit. We're sitting near support, which is right here, right? This structure here. You can see like on the way up, right? There's not a lot of support. Kind of like a straight up move. We got gaps, gaps, gaps. And then these moves are just kind of like straight up. There's no consolidation. And then this is the only little like 2 week structure where it kind of built a little bit sideways action before we broke out. That's why kind of market held a little bit of support right there. If this breaks through, let's say we crack down below 624, we're going to start filling gaps due to not a lot of supports below us. So we start breaking where we Friday's low, we're going to head straight to 622. And if that breaks, we're going to start to come into this volume where this volume node is, which is around this area. There's a little bit of structure below us here. So that will be with the support around these 580 levels. And if we bounce, then we'll try to likely back test this 692 to the 700 mark level of this structure, right? You can see this whole structure above us is now acting as resistance because we flushed below it. So if we do bounce here, there's a chance where we back test here and then kind of reject from there. If it even gets up there, let's see how long. We would need an 8% to 7 to 8% move to come back to back test this level. All right, Tesla still resolving itself. Really not, haven't gone out of this congestion yet. It's the most choppy, choppy chop I've ever seen. Let's see if there's more congested chops here. I mean, these are chops, but these are actually a range there. Here a little bit, but that's not as. But yeah, it's not like it doesn't look like a scribble. This is like looks like a scribble. And we'll have to see which way the scribble ends up breaking out. It's starting to look like a tiny range though. Right, big move up, kind of a big move down, but doesn't break the low. It's like a weird, really weird big move up. You call it maybe here, and then kind of like that. Not really. Maybe like a big move out here, right? Didn't break the highs, and now we come down a little bit. Maybe we'll come down a little bit more here, and doesn't break these lows, and then we'll kind of like tighten up a little bit and just like scribble around here, and they'll end up breaking that range, whichever way they want decides when it does finish tightening. But yeah, honestly, this is just complete scribble here. We'll have to see which way it resolves itself. Yeah. So far, bulls aren't playing defense, right? These are all higher lows. All the lows are higher at the moment. So yeah, I mean, on Friday it was it's kind of like wasn't even that strong of a day for the Qs, and we had like we have relative weakness day, and then we have like relative strength day. So it's been very back and forth. So yeah, I mean, Nasdaq was up 0.47, Tesla was up 3.7. Yeah, but if I were to play Tesla, I don't think I would have an edge either way. To be honest here, back they do these back and forth chops. All right, let's take a look at Amazon. So bull break from its earnings and new all-time highs. No resistance. But that being said, we did sell off a little bit, right? But nothing too crazy here. Sold out 2.5%. So no big deal. Will always start to be a rough flag if we fill this entire gap and come back into this structure. Let's see if there's a trend line here. No, not really. But yeah, so if we break down and give back all the earnings gains, so what the bulls want to see is it sells out a little bit more, back test this all time high or around this level, right? This 235 to 240 level, touches it, and then it bounces. And then once it bounces, either it forms more of a sideways range, then breaks out, or it's kind of like reshape, and then like to a new high, and then we go sideways. So those are the two best case scenarios for bulls. For bears, you want to see the back test, touch, bounce, weak bounce, rollover, fills with the entire gap, and then come back to this 222 level, where it's kind of been going sideways for the very long time, right? So that would be the best case for bears here. So we'll see which ends up playing out next week. All right, Microsoft here. Similar idea. We had that right big move up into earnings. Didn't break this high, and then sold off after the earnings. Right, it was yeah, had a bullish reaction too during the earnings. So all these earnings are selling off. Even Google did the same thing too. Um, but we still need follow through from the bears, right? So far so good, right? Got a lot of space now for bears to confirm their continuation of their downtrend. So we get lower high, we get weak bounce, and then we lower low. That being said, this entire range is still just a sideways range, right? If you zoom out to the monthly chart, there's really no red flags. This is kind of like forming a bull flag at the moment, right? This is the bull flag. This could have been a bull flag breakout, but I guess it didn't break out, so it could still be a longer term congestion sideways, letting all the indicators catch up, all that kind of stuff. Right? EMAs are pretty extended away from it, right? And still catching up at the moment. So no red flags really for Microsoft until if it starts breaking this low, this September low, around 492. That would be actually a monthly downtrend. So that would be the red flag. Um, if that happens, that'll be a failed bull flag as well. Yeah, if we start from break that low and we're getting a follow through, we got to break 472 though. So if we start breaking this low, confirming a monthly downtrend, and then get follow through and break this 474, um, yeah, that would be not good for the market. That would be that would be 8% to 12%. And we'll probably backtest this. If that happens, we're definitely backtesting 450s where we broke out from this previous high. So we'll take it one step at a time. For bulls, I mean, it's probably just gonna continue because best case for bulls, this is a tiny range, big move down, big move up, didn't break the previous high, big move down, doesn't break the lows of the pivot, and then it kind of goes tiny range like this, sideways for the bulls. I'll say that's the best case for bulls, and then we kind of gear up into like let's say Christmas rally, right, or Santa Claus rally, into December, and next thing you know, we get that bull break. That'll be the best case for bulls. All right, let's look at Google here. So similar idea, right? Big gap up on that earnings. I think it was like 10, 9%. And then we kind of give it all back. And then we actually follow through a little bit more on Friday. Which kind of makes sense, right? End of the month, October, people taking profits, right? So no huge red flags on the chart, right? You could have said, "Oh, this is a blow off top. This thing is gonna tank now." Could have said the same thing over here for Microsoft, but guess what? Ended up being fine, right? It just went sideways. Um, so no red flags at the moment until if this comes all the way down here, back to the structure, bounce, backtest, fail. That would be the red flag that we're looking for. But at the moment, no signs of that yet, right? This could just go sideways, just like Microsoft did, and then consolidate near the highs. That would be exactly what the bulls want to see. Going sideways near the highs after such a significant move, right? If you move 100% and then you consolidate near the highs, that's every bull's dream. So, yeah, no signs of red flags at the moment. But let's just see if bears do show up or not, right? They did sell off all these earnings after these gap ups, but are they going to follow through? Are they going to follow through this time? Is the question. Which they haven't followed through in any single way, shape, or form for the past 7 months. So let's see if they can follow through. Right, another sell off here, right? Gap up, sold it all off, but is there any red flags on the chart? Not really. Currently, right? Where this is literally near all time highs too, right? Where there's no resistance above us. Same layer with Google, no resistance above, but we do see some people are taking profits, right? And that kind of stuff. But which is pretty normal, right? We're extended into earnings, gaps up, people takes profit, end of the month, all that kind of stuff. So for bears to show up on this name, you want to break back below this previous all-time high level, right? Back test here for like 10 days, finally broke out and see this move, right? So the red flag would be if it comes back, flush back below this 258 level, and now it acts as a resistance, and it stops everybody out from these 2 weeks, and then rolls over, come back to 247s. That would be the red flag for Apple. But what bulls want to see is come back down here, hits 258, bounces, and then we consolidate around these levels, and above where we broke out from would be the best case scenario for bulls. And you guys would just sit pretty and then wait for maybe December, and then we get a rally like that, something like that. All right, let's look at Nvidia. So Nvidia here broke out. You can see here after that too, bears couldn't take it any lower here for multiple 2 weeks here. It broke out. Right, clear resistance. You can see once it broke out here. I remember there's volume coming in on Friday here as well. And next thing you know, we are new all-time highs, right straight to 200. Talked about this one last week here. But no signs of red flag either, right? If we have mag 7s that are hitting new all-time highs, 1, 2, 3, 4. 4 out of 7 hitting new all-time highs. Market is not gonna roll over. So no signs of red flags. We did have this kind of line drawn together. Previous support, resistance. It did gap above it, but now we're below it again. You can see when we're above it, it kind of acted as support that day, and now it gapped below it. Now it's acting as resistance. We'll just keep it for now, because there's no real resistance at all-time highs. So what will be the red flag is if we give it all back, come back test here again, this 182, get a weak bounce, and then crack below this structure right here, right below this 177 level. That would be a red flag. For now, it's gonna be tough for bears to do that, but we'll see if they can. So we'll take it one step at a time. For bulls, you just consolidate near here, right? We have like 5 days straight up, right? 2 days of literally 1 day of selling. It's perfectly fine. This could just be a bull flag. Next, you know, we go again. So best case for bulls, we stay above 195. Yeah. No huge red flag, but short-term support right here around 200. You can see bulls playing defense here. Defense. But it's looking like they want to break it. So if we do break that, then it should be an easy flush for bull bears because there's not a lot of volume here on that breakout. So not a lot of supports. If we do flush at 200, it's literally just this one candle here. So it should be an easy flush for the bears back to 195. If bears can't do that, then they're not present in the market at the moment. So, all right, that's all I got for you guys. Feel free to like, share, and subscribe. Guys, learning or want to support the channel. And I'll see you guys tomorrow for commodities update. And yeah, if you guys want to check out the one-on-ones, Patreon link, or just book that 15-minute free call. If you guys want to talk more about it. Have a great rest of you guys' weekend, and see you guys tomorrow.